All right, so if you're watching this video, then you probably want to know what the Fed said yesterday, exactly what caused the markets to still remain uncertain, and where the markets are going to go from here. I'm going to break it down for you guys as we usually do on this channel. There was some good, some bad, a lot of it expected, and the market right now is really trying to find support. However, I still think there's another round of potential capitulation, as I said yesterday on my live stream, which was lit, by the way. We're going to get right into it, and then I will tell you how I'm currently still hedging the portfolio. So if you are interested in your portfolio and your trades, you definitely want to stick around until the end to see how to successfully hedge a portfolio during these uncertain times. Let us get right into it. If you get anything out of this video, leave a thumbs up. So yesterday we heard right from the horse's mouth. We will get into what Jerome Powell said. Remember, there are three main things that we're tracking with regards to Fed policy. Number one is tapering. We know the whole story on tapering already from the previous FOMC meetings and meeting minutes. They're going to stop, or they're going to taper, and they're going to stop asset purchases in March. So they're going to taper gradually from now until March, reducing asset purchases, hoping to complete by March, where we will no longer see the Fed purchasing assets in the form of treasuries and mortgage-backed securities. Number two, we have the federal funds rate. So right now they are still targeting a 0 to 0.25%. This, in my view, is where I think they made the biggest fumble, where Jerome Powell, I think the market was looking for more certainty on when they will raise rates, how many rate hikes we will get, how violent it will be. And this, to me, is where he was the most vague and why the market is still sustaining a little bit of volatility. And then the third thing is the balance sheet. Will the Fed let assets just run off and mature, as he hinted during his confirmation hearing, his second term confirmation hearing, or will they actually actively sell balance sheet or sell assets off of the balance sheet? Now, he did say that they will be flexible on this. Again, another topic of ambiguity, using vague statements because he did not want to shock the markets further. But those are really the three monetary policy topics that the Fed is trying to control inflation with. So let's get into what Jerome Powell actually said. Then I will get into the markets and then give you my trades. Everything will be in the chapters below, so feel free to go forward and backward as you like.
In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation.
So he's saying that inflation is worse than expected, and it is even higher at this point than they expected it to be. And this is where part of the problem is, because as you'll see in a second, even given the fact that inflation is more violent, I think the market wanted to see him be a little more strict and defiant as it relates to monetary policy in order to beat that unexpectedly high inflation.
Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals. In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet, and we will discuss these matters in upcoming meetings and provide additional information at the appropriate time.
So you get the gist there, right? So basically keeping the federal funds rate at 0 to 0.25%, meaning they're not raising it, haven't given any guidance on when they will raise it. They will address it again in March. So there's an uncertainty there. And then the second thing, the second major thing about the balance sheet, saying that they don't even have a time frame regarding the pace or the timing of when they will start reducing funds off of the balance, or when they will start selling funds off of the balance sheet, right? That is another round of uncertainty. So with both of those things uncertain. So basically, the only thing we have that's certain is that the tapering will end in March. And with that said, the VIX is still above 30. So the VIX is basically the volatility index, which is the market's fear gauge, stating how fearful the market is, or in more technical terms, the moves that the market expects the S&P 500 to make. The higher this is, the larger they expect those moves to be. And usually the higher this is, those moves are negative because down moves are more violent than up moves. And this is purely calculated based off of the activity in SPX options or S&P based options, right? So based on what the options market is doing and what institutions, what kind of orders institutions are putting in, this is a very highly accurate representation of the fear gauge that the market is feeling at the moment, because SPX options are extremely liquid and a lot of institutions use that to hedge. So the higher this goes, the more volatile and the more fearful the market is. Now, throughout the post-pandemic phase, certainly in 2021, we've traded well below 20, occasionally popping above 25, but really in this range here. And we didn't pop above 30 until towards the end of last year, and then really January. This January is the worst start to the S&P 500, I think, ever, or it's definitely up there. So now we are continuously above 30, and I don't think the market will see stability until this drops. I said this in a previous video that if you compare the VIX, if you contrast this with the S&P 500 index, for instance, and you are trying to see when the S&P 500 might find support, it is when the VIX tanks as the S&P 500 is finding support. So right now, for the last 5 days, we've seen the S&P 500 hover around this range. It's trying to find support. It's trying to weed out all of the capitulators. Certainly a lot of people have capitulated. A lot of people that you may know on YouTube have capitulated already. But if we get the VIX, if we can get the VIX to tank, right, while the S&P 500 remains at this level, then that is a signal that the short-term bottom is likely in, at least in the short term. Now, I've stated before that with the job growth that we have, with the record GDP growth that we have, there really isn't a reason for me, in my view at least, why we would have a recession in this case, or why we would have a long-term bear market. Now, a correction, yes, that was due, and certainly the conditions are ripe for a correction. Now, maybe even a sustained correction, but for this to be an extremely violent bear market, there has to be way more than what is going on now, meaning potential geopolitical issues globally. Mainly the focus right now is on Russia and Ukraine, and obviously China is always in the picture when Russia and the US are involved. So what's going to go on there, as well as the price of energy and the price of goods in general, right? If there continues to be this insane demand but no supply, then that can cause what's called a demand shock or demand destruction. And that could be very detrimental to the markets, for sure, especially to the economies globally. But so far, the market is trying to find support here, and we need the VIX to drop. So pay attention to that. So with that said, I think there are some really good opportunities in the market right now. What stocks are we playing? If you're a fan of the channel, you saw the live stream yesterday. We bought Microsoft when it tanked after hours. Even though it recorded its best quarter ever, it dropped to 273 after hours, which was at the 100-day moving average, put it in official bear market territory, and I picked up Microsoft then. Remember, when you are investing, you are not trying to find the bottom, but you are trying to find a price that is acceptable where you think the stock or the company that you're investing in is undervalued. And please, 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 I'm not talking about high beta stocks. For me, this is not the time to buy, Tattooed Chef or Fubo or whatever, name your favorite stock, DraftKings, Robinhood, which we actually shorted today. For me, this is the opportunity to buy into blue chips that everyone normally cries about not getting a good price on. Oh, when are we going to get, Tesla under 900 or under 800? When are we going to get Microsoft under 300? Well, the market is giving that to you right now, right? Those that pray for the dip rarely buy the dip, but the market is actually giving that to you. So Microsoft is up there, Amazon at 2,700, definitely for me a no-brainer dollar cost average for the long term. As I said, I'm buying McDonald's on any weakness post earnings. They already reported earnings down slightly today. I like McDonald's as a dividend paying value stock. And then you don't have to look no further than the indices at the moment, right? Like the NASDAQ is sitting near the 300-day moving average. I believe the NASDAQ has more room to drop out of all the other indexes because it is the one that's going to be most affected by an interest rate hike. And the NASDAQ can fall to around the 315 level. However, it doesn't mean I'm trying to find a bottom. I might buy some now and buy some later. And the SPY is also at the 300-day moving average, right? It dropped to the 300-day moving average. So for now, not making a ton of purchases besides a handful of blue chips. So here's how we're hedging our portfolios. And by the way, if you want access to all of our trades, link is in the description below. Come be a part of a group of 4,000 traders talking trades all day, every day. But if you guys are on the Discord or you follow me on Instagram, because I've been giving these away for the whole month for free. I just post them as a story on Instagram every day before market open. But this is the options day trade watch list where we are neutral. We wake up neutral. That's the beautiful thing about this is that we wake up. I don't care if Netflix is bullish or bearish or Lucid or the Russell or the SPY or NEO. These are levels that I identify based on what I see in the charts, pre-market and after hours, and then I draw levels and we have our plays ready. And today we played Netflix from the Netflix 400 call went from 240 to 525. This was after news that Bill Ackman bought, I don't know how many $1 billion worth of Netflix. I think it was like 1.2, close to that. Made 118% on that Netflix call. We also had the Lucid put, the 32 put. Lucid tanked to the $28 level, made 205% on that put. And then NEO got faked out on the first entry for minus 15%. Second entry got 69% on those puts. I did a whole video on how to day trade these watch lists. Check that out here for sure. But basically, yeah, this is what it looks like. These are the levels that I draw pre-market. You can see here Lucid busted below our level and we bought that 32 put right as Lucid dropped and made 205% on that. But if day trading isn't your thing, another thing that we did was sell call spreads against the SPY and the QQQ. We sold the 435, 436 vertical call spread against the SPY, meaning that if the SPY is below 435, we keep 100% of the money that we sold it for. Obviously, you're doing this for a certain portion of your portfolio because you don't want that much performance drag if the stock market continues to go up. But these are all just hedges. We sold calls, covered calls against our shares. And even here, I'm showing you how to beta weight your portfolio so that you could see how risky it is against the S&P 500 and then buy the appropriate number of puts in order to get you delta neutral. But that's a whole other topic for a whole other video. These are just some ideas that we're giving endless amounts of an endless number of ideas in the Discord groups to try and help people hedge their portfolios so that they're not just sitting there looking at their portfolios bleed, all while learning how to build a quality portfolio, learning how to take this opportunity to position your portfolio so that it is it is full of high quality stocks and not high beta stocks that people have been getting burned on for the last year. And then one other thing I will say is that cash is also a position. Cash is also a hedge. Don't think that just because you're sitting in cash, that means that you are not participating in the market. If you feel like the market is going to draw down further and you are basically, there's only a certain amount of exposure that you are comfortable with, that's your prerogative. Learn to trade according to your risk tolerance, right? If you have 100% cash right now and you decide to commit 20% of it to the market and you can go to bed at night while keeping that 20% in the market and the rest in cash reserves, that's fine too, right? Like trade according to your risk tolerance. Although in my view, I think largely cash is trash and you will at some point be better off making a decision, an investment decision. Temporarily remaining in cash as a hedge is not a bad idea either if it helps you sleep better at night. Those are just my ideas. Take that for what you will and act accordingly. Do your own research. Learn how to trade this stuff. Go through technical analysis at night when the market is closed. Learn how to invest. Learn how to evaluate companies. All this stuff is so valuable and, can't come at a better time than now. Anyway, traders, hopefully I shed some light on what the Fed actually was rambling about, even though, they were basically just mumbling, not committing to anything, which is the reason why the market is still a little bit shaky. It is trying to find support here. Let's see if we can get that VIX drop while the S&P 500 will remain sideways. That will be your first indication that the market is ready to support here. Leave a thumbs up if you get anything out of this. If you have a question, leave it in the comment section below, or hit me up on the Discord and come join the Discord if you'd like. Stay safe out there, traders. Peace.